What's up, everybody? Welcome aboard. It is Trading Live with Bubba. It is Tuesday, the 9th of April, and, hopefully the markets will show up, unlike Purdue last night, but it appears that there's under a little pressure. They were higher earlier. They're lower now, under a little bit of pressure in the markets right now, as we can see. There's possibly a couple of opportunities, but it's been really quiet and really slow. So there's not a lot to do. It is my opinion that everybody's waiting to see what the CPI number is tomorrow, because, of course, we keep getting that garbage, ridiculous information about how inflation is getting better. And in my view, it is not. And in my view, there will be no rate cuts. So, again, we're waiting to look to see if there's any trades that'll show up for us. And right now, it doesn't appear to be at the moment. So let's start taking a look at the regular stuff we watch as well at the same time, looking for other opportunities. It does appear that Apple has potentially found a little bit of a bottom here throughout all the selling. Certainly, I would have no issue with selling some put spreads here for Friday. Now, again, remember, you have CPI, PPI, and earnings start on Friday. So you may want to be a little bit more cautious. That is certainly okay as well, because, of course, volatility is a little bit higher as we anticipate the numbers as well. Let's just switch back here real quick. It looks like there might be something to potentially do. And so I want to make sure we don't miss, as we've done very well with our day trades as well. No, not right now. Okay, so let's go back here. So Apple looks like, again, it was very oversold. It looks like it's kind of flattening out down here on the bottom. And again, remember, we're not taking a necessarily long position that the stock has to go up. All we're banking on is that the stock is not going to go down from here. Okay. And that's what we're using the support level for. Okay. Amazon continues to charge higher, but certainly I believe it is dramatically overbought, and I would certainly be a seller of call spreads here. That would not scare me at all. I would look to sell. In fact, let's take a look right here, even though it's not the platform I use, but I can get the quote to tell you what I think. Okay. And Amazon for the 19th, for the 12th, for the 12th, the 170, 185, 187.50, 190 vertical. 74 cents. That's a little bit short of what I'd like to get. I'd like to get $1 for that, but I could say that this seems to be a fairly reasonable spot and an area that I'd go ahead and take a look at that. Again, I'm not overly aggressive. I will tell you where I'm looking to be aggressive when we get there. Coin looks like it's found some support, of course, and here I would certainly be looking to sell some put spreads here, and Meta. As I told you last week, I sold the deep in the money call spread to create the synthetic put. And of course, it's already paid off. I've already cashed it in. But again, right now we're back in the middle of nowhere. So we're back in Nowheresville to trade. Here, Google continues to try to charge higher, got to that overbought extension and has already pulled back. But certainly you might want to take a look here as well. Again, anytime you see these markets spike higher or lower, either direction, we don't care direction. What we're playing here is the mathematical model, okay? And so if I look at Google, and let's say the 157, 160, 78 cents. So again, we're a little short on what I'd like to get. And here's where the crux comes in, okay? You've got a lot of big news coming out. Now, the news can go either way. Remember, we don't know which way the news is going to force the markets, okay? Now, we're seeing some heavy selling into the market, but again, the day's not over yet. So it appears to me that these numbers are going to be a little bit hotter than expected, okay, which would mean that there is more proof that the Fed will not be cutting rates, that the Fed will actually indeed may have to consider hiking rates, which then brings us into the next story. So you're really taking a little bit of an edge here. You're not getting the edge. You're taking a little bit of a chance here by trying to jump in front of this major news that can drive the markets either way. But again, so all I would be really looking for is if anything was extended in one direction or the other, I would certainly be looking to take that trade. For example, I would certainly be looking to sell spreads in gold. Okay. That goes without saying. In fact, I'm going to go look at that right now here. Let me show them to you, and then I'll go to my execution screen. Okay. Because I'm going to do that right now because gold is, as much as gold is good, and I love gold here, but I think it's very dramatically overbought, and I don't see any reason to believe that we're not going to see some selling here. And you could try it for tomorrow, but you're not going to get as much premium. If you sold the 215, 220 for 250, but it's worth 250. So I think you're better off looking at Friday and selling the 217.50 or even the 217.50, 220. Okay, I think that's a pretty good level to look at for about 96 cents. That fits into my protocol, and I would certainly be willing to make that trade. I'm going to make that right now. I'm with you. Hold on, let me just go make this trade and get it set up and see if it'll fill. Okay, hold on. But again, this is dramatically overbought. And I have, again, if it's wrong, if it's a loser, it's a loser. Again, I don't worry if I keep making the right trade. Okay, this is the story. If you keep making the correct trade over and over again, okay, it doesn't matter. Okay, that you're going to have some losing trades. Okay, but I'm going to go ahead and put that in. The trade's in and working. It hasn't filled. I will let you know if it fills. Okay, I'm working it at 96 cents right now. Okay. IWM is really in the middle of nowhere. So whichever side I go, I'm taking a guess on what's going to happen from this direction. And I know we're doing a lot of stuff back and forth, but I can see my price ladders that you don't see moving quite a bit. And of course, look at gold go down. Look at it. See? So again, I didn't get in. I did not get in. So it's not, but that was, I had the right idea, and it still might rally back a little bit. But again, it is fairly dramatically overbought, which would give us an opportunity there. It's popping right back up again. So again, from a day trading standpoint, we may get a buy. From a longer term perspective, I'm actually looking to sell. Okay. So again, I can make both trades. That's the beauty of what we're doing here on the 4-minute basis. A long-term capital gain is 4 minutes. Okay. So we have the opportunity to do either. Okay. And that is something that you want to remember, is that just because I'm looking for one thing for Friday, for the next 10 minutes, I could be looking for another thing. Okay. So I don't see much else to look at right now. So again, let's go back. Moderna, nice big pop today. Juicy. Again, very much oversold. Certainly I would be looking to sell. Now here, I want to watch for a little bit longer. All right. Because now this could be developing into the same trade we look for on a 4-minute scale on a daily. And if this continues to go higher and the volume continues to spike, then I would be looking to take a short position in this, okay, for the next couple of days. Okay, so these are the different things you look at based on how the market is functioning and what the market is doing. So I know it's overbought. I know I'm looking to sell, but I'm trading this off of a daily basis. So I want to see if it continues, if the volume continues to come in, and B, if it goes higher. Okay. So but in my mind right now, I am looking at potentially selling. Now, again, I don't have any numbers now because I don't have a trade yet. All right. But let's just assume that let's say it rallies to 115. Okay. I would be looking for Friday to maybe sell the 100, okay, 100, 115 vertical. Okay. But I'm going to put 113 there because that's where we are. So basically, I'm looking to sell this for $11.14 credit. Okay. But the 113, what you want to learn is that I'm buying the approximate 113 put. Okay. And I'm buying that for about $1.65 versus $2.50 on the board. So I'm buying the same put for less money. Okay. But again, it's nothing I'm going to do now. I want to see if it creates and finishes the way I'd like to see it finish. In the meantime, as you can see, there's no volume anywhere. So that means that there's not much for me to look at on a day trading basis. Let's go back and see what's going on here. Microsoft in the middle of nowhere, nothing to do. Nugget fits into the same as GLD. Okay. So now you can say, well, I got GLD on. I want to look at that, but maybe I'll use Nugget in this case. And let's see if I can get what kind of credit I can get in Nugget, because Nugget is a leverage ETF, which is somewhat beneficial, because remember, we know we've assigned the amount of risk we're going to take to the upside. Okay. We know what the risk is going up. So let's see, we're trading at 39. So if I look at the 41 for 35 cents, it's okay. Okay. It's okay. It's not great. It's not something that I'm like, oh my God, I got to get in, but it is something that I'm going to go ahead and set it up anyways, because if I get filled on both, it'd be okay. And if I don't get filled on both, if I get filled on one, that's okay. And if I miss them both, that's okay. Again, I'm never going to worry about one trade. Okay. That's one thing you want to remember. Okay. If I miss, I miss. It's never a big deal. So I'm going to work this at 35 cents. Okay. And try to get that one off. Okay. Because again, it is like gold itself. It is very much overbought, and it should see some sort of a pullback in here. And again, we'll see. NVIDIA, as I kept saying, it's going down in the 600s, I think. And here we are again. Now, again, there's nothing for us to do. In fact, if there was anything I was going to do now, I would be looking to sell put spreads. Okay. And this is probably a pretty good opportunity, but this is another one that, although I think it's going lower, is in an oversold position that should have some sort of a bounce. And remember, when you're selling premium and you're dealing in spreads, you don't have to be right. You just can't be way wrong. Okay. And that's the edge that you can create by looking at this. So this is one to watch. Okay. The Qs, they're pretty much in the middle of nowhere. Again, so there really isn't much to do. Square, not really much to do. SPY, really not much to do. Again, everything that's around mid-range is like, which side do you sell unless you want to trade iron condors? Now, I don't typically trade iron condors on their own. Okay. I use iron condors in the hedging model, and I use iron condors if I have one side that's a big winner and then I'm trying to capture both sides, then I would go to the other side. But typically, I don't trade iron condors as just a one straight out trade. Tesla, again, a little bit more up to, if it gets to about 180, 190, I'd be more interested in looking at it. So you can see that we don't have a lot to really look at right now. Okay. There's not a lot to do. So there's not a lot to do here. There's a couple of trades we talked about, and right now there is not much going on here, but we will continue to watch this while we're together for the next few minutes, because you never know when something might show up. We don't know what is going to be the next trade. We can't predict when that's going to happen. So all we do is we sit here and we watch the market, and we let the market dictate to us if there's a trade. And right now there is really not much to trade, because I first need a big volume spike. See, I don't have to look at the chart itself yet. I can just basically, if I want, just stare at the volume. And I know that if the volume doesn't get up to that line, or the volume doesn't get up to that line, or the volume doesn't get up to this line, then I'm not trading it anyways. It doesn't really matter. Okay. Those are the benchmarks that I'm looking for right now. So if I don't see that type of volume, I don't even have to look at the chart. I can do 100 other things while I'm waiting. I can study. I can do all kinds of things, because if I don't see the volume get to up to those levels, then there's not going to be a trade anyways. So it doesn't matter to me. So you can see I don't have to drive myself nuts looking at a chart. I can just wait for the volume. If the volume shows, then I'm going to be ready to make them. Then I'm going to look at the chart and see if there's a trade to be made on the secondary, because this trade takes two components: big price, big volume. Okay. If I only get one or the other, then there's nothing to do. All right. And again, this is what we have to always be aware of as we trade. Okay. Because at the end of the day, it comes down to that simple fact. Okay. Now there's an outside chance gold should reach there. And right now, I doubt it, but there's always an outside chance. What it's going to take. What you're really trading in this model is the emotions of others. Okay. You're trading on an emotional basis, that you're taking advantage of those that are either chasing the market up or panicking to sell it up. And right now you have neither. occur. Neither of those events are occurring right now. Okay. The markets are, although lower, very stable, and they're trading very stable right now. So there is no reason for either of us, for any of us, to get overly involved other than the trades that we've already potentially set up to trade. Okay. And that is what you want to remember, is we've already set up some trades. Okay. I'm going to go to set the Amazon trade up now too. I'm going to go ahead and take that if I can get it. Okay. Because I think that it's a reasonable trade, not a great trade. I think it's a reasonable trade. Okay. So I'm going to go ahead and take that for 75 cents if I can get it. Again, if I don't get it, I don't get it. I'm not going to worry about it. Okay. That's what you want to remember. Okay. If we don't get what we're looking for, then we don't have to make the trade. Okay. You can be very particular and very, very, very much looking at price, because at the end of the day, okay, if your price doesn't get there, if the action that you're looking for doesn't get there, then I'll ask you the question, what's the point of trading? Okay. Why should you take a guess and put yourself at risk when there's no need to do so? Okay. So here we are, we're watching, we're waiting, we'll see. And unless something major happens here, I'm not going to, again, there's nothing for me to do. It's that simple. Okay. There's nothing for me to get involved with right now. I'm just simply sitting here watching and waiting. And when I'm done with you, I'm going to play poker, because there's nothing for me to do. And I'm not going to sit here and wait. And I understand that the markets are probably waiting on news that's coming. Okay. And so as long as I recognize and understand that, then I can assume that there won't be much happening. And again, I've been watching, the markets have been open now for, the equities have been open for 2.5 hours, and there hasn't been much activity. So why would I expect, if it's not busy in the morning, okay, then why would I expect it to get busier later? And that is something that you have to recognize. And again, there's no right or wrong decision here. If you decide to stay and try to trade, hey, great. Just make sure that you don't see the mirage of a trade that doesn't exist and you force into a trade. Okay. You have to have whatever your plan is, whatever your qualifications are to make a trade, they have to match those. Okay. Without exception. And the only time in markets that we start to make exceptions is when they get really busy. Okay. And if we get really busy, then we are willing to take a little bit of risk. Okay. Because again, our business is more based on a volume business of number of trades we can make that are correct, not just the number of trades, the number of trades that fit the schematic of what we're trying to get done. Okay. The more of those I can get, the more money I know I can make, and the more exposure I'm willing to take. In this market, I don't want to take any exposure, because again, where is the activity? Where is the next trade coming from? This is what you have to focus on, because at the end of the day, without it, you're really just basically flipping a coin. And this should not be a coin flip business. This should be a business of where you and me can get an edge so that we can make the most amount of money. Okay. And that is as simple as I can put it when we look at it, because that's what it comes down to. Because at the end of the day, life comes down to two things. One of them is money. Okay. So let's see if we're going to get something here as we get ready to say goodbye. There's always the chance, right? Okay. There's a potential coming in the Russell. I doubt it. Okay. But again, one big order comes in now and it could push that volume. Okay. And that's what you're watching. And it would obviously push the price as well. And you're not seeing any great speed to the market. And speed is when you see the charts, either bar or candle, moving fast. They're hardly moving. Okay. So what we will do is we will see you back here on Thursday. And don't forget, every morning I do a live update. Not live, but I do a taped update right before the markets open for about a minute and a half. In the meantime, have a great day, everybody. We'll see you back here on Thursday, if not before.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and/or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and/or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.